It does take us to our talk of the tape, the rocky road for stocks. When the selling might stop, is it in the process of doing just that? Let's ask Dan Greenhouse, Solus Alternative Asset Management, and Lori Calvasina, Head of Equity Strategy at RBC Capital Markets. Welcome to you both. Lori, I'll begin with you. Ed Yardeni cut his price target today, as you might have seen, to 6,400 from 7,000. He was pretty lofty, and he's pared it back a bit. You're keeping yours so far, correct, at 6,600?
Yeah, we haven't made a change from 6,600. I will tell you, though, Scott, I've been talking about my bear case as much as my base case this year. And we laid out in our year ahead outlook a bear case of 57.75, and that was based on, 5 different models. It's now shrunk down to 4 different models. We've updated some of the math. But we said coming into the year, right, that it was going to be a very difficult forecasting journey. There was going to be a lot of twists and turns, and you were foolish if you thought you could predict every single one of those twists and turns at the beginning of the year. Now, my 6,600 absorbs where we are right now. We've said all along it was going to be a rocky path. We could handle 5 to 10% within that 6,600 number. But if we break, we don't think we break a little. We think you go into a growth scare, and that's a 14 to 20% drawdown, not from here, but from peak. That's what we saw in 2018, 2015, 16, 2010, 2011. Fears of recession or a systemic issue that didn't manifest. If we do that, my target won't hold. We'll have to flip into the bear case.
How's that sound to you, Dan?
Listen, Lori's good, and I think there's a lot to like in that. I think the problem I have...
Or dislike.
Well, it depends on... Yes, no. I like a lot of what Lori had to say.
Yeah.
I think the growth scare part of the conversation, which you touched on with the panel on halftime, talks to the uncertainty and the sentiment in market. Earnings are basically the same now as they were. Earnings expectations over the next 4 quarters are basically the same now from when the market peaked in mid-February. Obviously, the multiples come in, call it 2 and change turns. That speaks to the level of uncertainty, and that explains the entirety of the market decline. What I was going to say is I'm going to take somewhat of a controversial position here.
Go ahead.
Controversial, contrary to some of the consensus, and say inherent in what's going on, and Lori, tell me if you think I'm wrong, there are just worst-case assumptions going on. Trump's going to drive us into a recession and a depression. Our allies are pulling away. Their money's coming out of the market from foreign depositors, et cetera, et cetera, et cetera. And there's just this flailing around when I think in reality what the administration is simply saying, not explicitly, but very, very implicitly, is these are negotiating tactics, and we're trying to extract things from our trading partners, and when we get what we want, we back off a little bit. And I think if over the next few weeks and months, some semblance of a balance on Ukraine and trade can be reached, there's no reason to think that underlying fundamentals of a relatively healthy economy and stable earnings growth can't support higher stock prices from here.
I think in part, to push back a little bit, I'm not necessarily sure that it's the market flailing around. A lot of the flailing around has been coming from Washington, which has gotten the market upset the way it has. On again, off again. This is going to happen. This might not happen. If they do this, then we'll do that. If they do this, we won't do that. The market doesn't really know what to expect. I can guarantee you almost that neither one of you expected that the market would look like this some 50 days into this administration.
No, I did not. That's fair. And listen, it is fair to argue that the administration's rollout of some of these policies, particularly on the tariff side of things, could have been smoother and more predictable than what's happened. And I would concede that point entirely. What I'm getting at with the flailing around on the response to it is everyone is treating this as if worst case outcomes are your base case. And granted, it comes when the market was at a high. Let me say it another way. I understand what the administration is trying to do. I understand that it entails some short-term pain to fire people and to try to reduce the deficit. Pre-COVID, expenditures were $4.5 trillion. They're now $7 trillion. That if you're going to adjust that, there's going to be some short-term pain. And I imagine that's what people are wrestling with.
The other point is that the administration has been telegraphing all of this. Maybe the market wasn't listening at the beginning. One after another, whether it's the president or others within the administration, have just come flatly out and basically told you there's going to be pain. There's going to be a disturbance or a disruption or a detox. And I'm not so sure that the market was either listening or wanted to listen, but this is perhaps what that looks like.
No, I absolutely agree with that. I mean, I attended Trump's speech at the Economic Club of New York back in September, and he spent a lot of time talking about tariffs. And it was clear to me from that speech that he thought they were an appropriate tool to use. And I do think that in this discussion of negotiation tactic or good policy, Bessent was asked about that in his speech last week, and he seemed to say that they were both, that this was, a tool that was appropriate to use, and they would try to use them. And I think, there's just been this debate and this just insistence as I've talked to clients the last few months of, no, he doesn't really want to do this. It's just, it's just a scare tactic. And, I do think there's some negotiation in there, but I do think they also truly believe that they're doing the right thing. And I think they've tried to put forth their economic vision, which has been quite surprising to a lot of people. And, I think they've been pretty transparent, to be honest. I do think the messaging of short-term pain for longer-term gain, I think that's become more refined lately. The question now is how much short-term pain?